Some investors were worried about the demand for goods on Tesla stock, but Elon Musk reassured investors that in the fourth quarter, they would sell more than enough cars. Is the reassurance enough green light to buy Tesla stock? Find out as we discuss. Is it the time to purchase the dips of Tesla stock? Tesla stock is one of the market's most followed and owned stores. Investors and analysts always wait to hear good news about Tesla before they risk their money. Investors buy to gain, and investors wondered if Tesla's dam would go up high or decrease. Still, Tesla has given its investors a good reason to continue to buy Tesla stock, as Elon Musk reassured its investors that amidst competition from other EV companies and the recession, he is still very optimistic that Tesla stock will make a 50% or higher growth in the fourth quarter.
It looks like Tesla will continue to grow at a 50% annual growth rate. Oh wait, no, he actually has changed that sentiment slightly. He says 50% or greater annual growth rate, so at least 50%. He then goes on to say that there might be occasionally a year that be a little bit less, and then some years that will be a little more.
Stock splits are just strategies to get more people to buy goods, enabling more demand for goods, hence an increase in profitability and more investors. Tesla had a stock split in August. Tesla brought down the prices of goods to enable more people to buy, which is a good strategy for business because it's a win-win situation. As people believe, the company gains. At a stakeholder meeting, Elon Musk said the most robust competition was efficiency in manufacturing and that the company's long-term investment lies in AI-powered robotics. Musk assures investors that the company will make sales of 2 million vehicles by the end of 2022 and 20 million sales in 10 years. This is a good reason for long-term investors to buy. Tesla did not only reduce prices, but also assured its investors to expect 50% deliveries. We will discuss this later.
The point is,
Tesla's Q3 earnings beat the estimations made by analysts, although they are facing challenges of interest rate hikes and competition from other EV companies. Tesla reported earnings per share, EPS, which were up 69.4% year over year to $1.05, which was higher than the expected $1.01. Tesla stock revenue was up by 55.9% to $21.5 billion, a downgrade from analysts' predicted $21.9 billion.
First up, the company's profits increased, but the revenue standing at $21.45 billion failed to hit the target of $22.09 billion.
Tesla produced 365,923 vehicles in the early days of October, which was higher than analysts' expectations of 363,300 and delivered 343,830 of them, calling attention to the problems of a potential backlog in the industry. Tesla assured its investors that for the coming years, they should expect 50% deliveries, which will depend on a stable supply chain, operational efficiency, factory uptime, and equipment capacity. The video is interesting, but remember to pause and hit the subscribe button before you forget. Nothing in this video should be misconstrued as financial guidance. Endeavor to do your research before investing. Despite the US-China trade wars, Tesla seems to be on track as investors are not pulling away from buying the dips on Tesla. There has been a trade war between the US and China before, as it also happened during the reign of ex-President Donald Trump. During that time, Elon Musk was trying to set up a Shanghai plant, and there were a lot of doubts, but he did it anyway. Elon Musk meant it when he said, "When something is important enough, you do it even if the odds are not in your favor." The Shanghai plant meant a lot to him, so he put all the effort into making it happen. And today, this Shanghai plant is one of the reasons Tesla can produce enough vehicles. Although there is a US-China trade war, Tesla's highest price target is $436. This will be discussed later.
Big picture.
One day, Elon Musk is launching mini satellites into space to expand his space-based global internet service. On another day, he opened a new auto manufacturing plant in China amidst a trade war and became the first foreign company ever to do so. Tesla outdid itself by achieving this goal and being the first foreign country to set up shop in China. Then there was an announcement of a new version of a Tesla electric vehicle, and now he's buying Twitter.
After revolutionizing the space race and electric cars, the world's richest man is now promising a Twitter makeover, renaming his own account Chief Twit and proclaiming the bird is freed. Elon Musk carried a kitchen sink into Twitter HQ this week, tweeting, "Let that sink in." then fired senior execs once closing the $44 billion deal.
Investors and analysts don't just believe Tesla is a good buy. Still, they believe Tesla has an excellent reputation, considering the many times Tesla has beaten the market at the very last minute and pulled through the storms almost all the time. Analysts believe Tesla stock is a good one to buy, considering it has a consensus rating of moderate buy, based on 19 buy ratings, 7 hold ratings, and 4 sell ratings.
So I guess positive.
Investors and analysts remember Tesla's average price target of $292.89, based on careful analysis of 30 Wall Street analysts issued 3 months ago. Tesla stock's highest price target is $436, with the lowest being $85. Tesla stock average price target is a 30.38% increment from its current stock price of $224.64. Looking at how Tesla has been likened to a seesawing stock this year, it is probably on the rise again, and many investors are dashing in to get a piece of it. Anticipate more videos. Thank you for your time.